Hey, you're watching Your Trades on ET Now with me, Shreyanti Singh and Priyanka Uppal, and over the next half an hour, we'll help you make sense of the day gone by in trade. But first things first, let's take a look at the markets. And Nifty, of course, ended the day sub those 24,000 levels. When you take a look at the sectors then that aren't doing well, there's a long list of sectors. In fact, not one sector that was gaining at all, because you do have PSE, PSU Bank, Auto as well as Finance. Those were the sectors that were losing in trade. All of the sectors that you had towards the end of the day, you did have IT as well as realty slipping into the red as well. So you do not have any sectoral gainers at this point in terms of how the day has ended in trade. And when you take a look at what really happened in terms of the IT pack as well, that managed to show some resilience throughout the trading session. Infosys, HCL Tech, among that entire pack were the ones that did really well. On the flip side, you did have some of the big banks, Axis Bank, Kotak Mahindra Bank, HDFC Bank. Those are the ones that I'm talking about that didn't do all that well. When you take a look at the kind of moves that we saw coming in on your screens, Axis Bank, HDFC Bank, 2.7% downtick coming in, went home with those kind of cuts as well. When you take a look at Jubilant FoodWorks, let's try and get that chart up on the screen. Now, on the second quarter revenue basis, you did have quite the miss coming in terms of the entire set of numbers for Jubilant FoodWorks, but a positive surprise on the SSSG growth as well, and you can see that reflected on the charts as well. 5.7% uptick is what the stock really did in terms of how it ended in trade. Let's also take a look at UPL, because that, in terms of overall, the result was a weak one. You can also find that being reflected in the stock price as well. When you take a look at UPL, you did have a whole host of counters that were buzzing away in trade, the likes of L&T Tech as well as Hyundai Motor. Now, it was a disappointing set of numbers coming in for Hyundai Motor India, and you do have that disappointing set of numbers being reflected, as well as the weak commentary that we've also seen come in the con call itself, because they've talked about how there's low single-digit growth trend that they see continuing as well. And aside from the disappointing set of numbers, that commentary as well is not doing all that well in terms of what the stock move that we've seen come in for Hyundai Motor.
Yes, Shanti, overall the selling has got intensified, and looks like there could be another big quantum of FI selling could be coming in. At least, the stocks like Britannia, this is a second day in trade that they fell. Of course, before it went into the numbers, the weak sentiment, and overall it's the lackluster earnings. Though muted set of expectation, that's what Street has already penciled in as far as Q2 earnings is concerned. The kind of downgrades which have come in, the kind of misses more than hits which has come in, margin pressure, FI's intense selling, core FMCG is clearly, it's clearly facing issues like urban slowdown. These all factors together have weakened the sentiment, and we've broken a very crucial support now. 24,070 is one very crucial support which we have closed. We've broken down clearly. Now, what do this means? What are the key levels? What are the key levels that we want to eye on? And to talk about that only, we have Aamar Singh, who's a vice president who tracks for Angel One derivatives and, of course, the technicals. Aamar, very warm welcome. What do we say? We were just expecting a rebound, the kind of trade that we see in global markets, though the Asian markets are also mirroring the kind of losses. It's in deep red. Asia markets are also trading up with it today. Intense FI selling is not stopping. Lackluster earnings, we already knew that many of the sectors which are facing the margin compression, or even the inflationary pressure, even the outlook going ahead, management are not very confident about. This, of course, altogether paints a very, very weak sentiment and very weak picture also. What are the crucial levels that you're eyeing on, the key support levels for Nifty and Bank Nifty at this point?
Yeah, actually, if you look at Nifty to start with, we did witness that it had bounced back from the recent close of 23,840, and from there almost towards 24,500. So there was roughly around a 600-700 point rally. But overall, we've been very clear with our view that higher levels will be sold into, and that's what some of the technical indicators, they continue to point from an intermediate term trend perspective. So having said that, we witnessed selling pressure, and also, as you rightly said, domestic triggers have been negative in the sense that quarterly earnings, be it the selling by the FIIs, and also the downgrades. So they have compounded, and also what we are seeing is that the advanced decline ratio is more in favor of the bears. So it's more of spread out across the large caps or the mid caps. Earlier we saw Reliance witnessing some very sharp sell-off happening. It's the IT which has really saved the day to a certain extent, and IT still has been positive, like HCL Tech has been positive, but otherwise most of the stocks have taken a beating. So the levels to speak about, I would say, for the benchmark index, Nifty somewhere around 23,600 levels, because earlier 24,000 was acting as a very important psychological and technical level, and below that 23,800 is something which is very crucial. So if we see a break below 23,800, consistent break, it could be if it breaches during the day and then comes back and closes, so that should be taken as a positive. But if it breaches below 23,800 and sustains below 23,800 for a few days, that means there will be more selling pressure. And then the next zone of crucial and major support for Nifty would be around the 23,400 to 23,600 zone. That would be the next major support zone. What's likely to happen is that there could be some pullback. So people might assume that we are witnessing a trend change. That's not likely to happen in the short term till the time we see Nifty sustaining over the 24,500, 24,600 zone. So it's more of a sell on rallies. Yes, there is very crucial support at 23,800. So if we don't see that breach, we could witness a pullback, but it's going to be more of a range play with the bears having the upper hand as of now.
That means 23,800 is a crucial support level where you would want to watch and take your next strategy ahead. In that case, Aamar, and yes, of course, all rallies are being sold into what we saw. There was a chance, though the VIX hasn't moved much yet. In fact, there was a breather which came in yesterday. But now talks are also about that Nifty could even touch its 200 DMA. How much do you think it is possible?
I would say it's, if you look at India VIX, India VIX has not increased much, so that is a positive sign. So that despite the correction, investors and market participants at large, they are not very much perturbed until and unless there is a very sharp correction, and which is somewhat of a significant magnitude. Today also has been a sharp correction. It's almost down by 250 to 60 points for the Nifty. But if it continues for a couple of days, then we could witness a spike in India VIX. Otherwise, it could remain in this range. As far as hitting the 200 DMA, very likely, because what's happened in the major benchmark indices is that the intermediate term structure of the charts that has changed a lot. Meaning that that clearly shows that there is a lot of weakness, and expecting that there's going to be a sharp pullback and rally, that's not likely to happen. There could be some consolidation. Again, higher levels, as I said, would be sold into, and we could witness some consolidation. Breaching 23,800 is something, then we could witness some sharp correction of 300 to 400 points on the downside.
Aamar, since you've mentioned select pockets of growth coming in, you do have IT that is making it to your list there. But do you think realty is also making it to that list? Because you did have the realty index that snapped a 3-session losing streak. What is your take coming in when it comes to that entire realty pack? Do you see some strength coming in there?
So if we look at the realty pack, so what is happening here is that realty, most of the stocks have already corrected significantly. So if I look at DLF, DLF has corrected, is trying to form a base. If I look at Godrej Properties, again, some sharp correction from almost 3,500 levels to currently around 26 or 100 odd levels. Exception is Lodha is an exception, I would say. There we are seeing some sort of, I would say, positive momentum. Otherwise, Mahindra and Life Spaces also we are seeing some correction, but it's very close to support zones. Overall, reality is an exception. It really hasn't corrected much. It continues to remain strong and firm. So this is one which is helping. Prestige, again, we are seeing some consolidation post the correction from almost the 2,000 levels to currently around 1,600 odd. It's very crucial. It's a very crucial support zone. But what's happened in most of the realty stocks leave apart overall reality is that the trend for the intermediate term has changed. So that's not very strong anymore. That's on the weaker side. That's the reason we'll see some sort of consolidation there. And some of the realty stocks, post the sharp correction which has happened over the past few weeks, they are at crucial support zone. So there could be a slight pullback. So it could be more of a dead cat bounce rather than a real sharp recovery in this space.
But very quickly, which pockets are you going to eye? Any specific recommendation for our viewers at this point in time?
I would say infrastructure, cement is one area one can keep a close watch on. I would, in terms of stocks, Ramco Cement is one stock which one can definitely keep a close watch on. Despite the market correcting, the stock has been holding up quite firm, and today there has been a sharp up move for the stock. So this is one stock one can look at from a buying perspective. So any pullback towards 900, 905 is a buying opportunity, with a target of 953 and a stop loss of 879. And the other is from the food and beverages space. That's the Jubilant Food. That's the other stock one can keep a close watch on. We've seen some pullback because the stock had corrected significantly, almost from 900 levels to sub 500, currently it's around 635, 636. So this is one stock one can keep a close watch on, buying around the 630 levels. With a stop loss of 607 and a target of 675 on the upside.
And Jubilant Foodworks as well as Ramco Cement, so the ones that make it to Amar's buy list. Thank you so much, Amar, for joining us today and taking time out. After this, let's also get you the word from the Vice coming in then. Gautam Duggar, Head of Research Institutional Equities, Motilal Oswal, shared his views on the second quarter earnings, and he also says that they have also cut Nifty EPS by 8% from April till date. Let's go across and listen in to what kind of an outlook he has on sectoral performances then.
FY25 is occurring as a bit of an outlier in a 5-year, 6-year trend where things are slowing down a bit. There's moderation, there is a breather. And of course, it's also a reflection of the government spending being down. First half, the government spending is flat. CapEx spending is down 17%. So let's hope that second half, the government spending picks up, CapEx spending picks up. There's been a good monsoon. So consumption, which has been the weakest point in this earnings season, also revives a little bit because the Kharif crop should be good. So those are the things as we stand here. As regards your question on sectors, so in this quarter, we have seen very strong performance from PSU banks. In fact, they are the only component of our coverage universe where we have seen 6 out of the 6 PSU banks that we track have beaten our expectations. Apart from PSU banks, healthcare has been good. They've also met expectations. Real estate has been very good. And then IT has been in line. And you can say even consumer was in line, but very soft. It was very soft. We were expecting 3% growth. We got 0. So very few, happy pickings in this broad spectrum of sectors that we cover. Apart from PSU bank, healthcare and real estate, very few sectors have posted a double-digit growth.
Okay, so they've cut the EPS estimates, understanding that it's not just that this quarter is lackluster. Indeed, the coming quarters could also be muted. We'll take a short break here. More to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Your Trades on ET now. So the trend clearly on Nifty, Bank Nifty has reversed, whereas we saw a trend of short covering on Bank Nifty up till yesterday. We were expecting, in fact, for first half, banks were doing much better. It's only that after 12:30 we saw a swing on the lower side, and that's how the banks started to fall, and we've seen a trend of short built up on Bank Nifty also. Nifty was already it was not a clear direction on Nifty up till yesterday, but now the trend is short built up on Nifty as well as in Bank Nifty. Wix remains same in that zone only. Now the higher calls like 24,000 calls are also being sold into 24,000, 24,100. These are the immediate resistance level for the markets, for the Nifty, as well as now there is a put buying at the strikes like 23,700, 23,800. So technically, there doesn't seem to be a support. What the action has actually painted a picture for us. So put buying at the lower levels and call writing at the higher levels. That's what we look like. Looking at this data, looks like we're in for more correction or maybe a consolidation.
Well, absolutely. Then moving on, let's get to the big story of the day. Varun Berry, Vice Chairman and MD at Britannia Industries, believes that rural is inching towards double-digit growth. In fact, he also adds that he expects short-term impact coming in on the volumes, but will be maintaining margins going ahead. Let's go across and listen into what he then had to say in the second quarter earnings call then.
we've been seeing very good growth as far as quick commerce and e-commerce is concerned. Even modern trade has been doing reasonably well, although the competitive scenario there is pretty tough. But we've been doing well, and we've been gaining share in both quick commerce, e-commerce, as well as modern trade. It's rural's coming back slowly. So as rural, starts to come back to the kind of double-digit growth that we were seeing in the past, I think we should be in a good place. See, rural is doing better. Rural was doing worse than urban till about 2 quarters ago. So it's doing better, but still it's in mid-single-digit kind of growth for FMCG. So that's not what it used to be, let's say, 4 quarters or 8 quarters ago. For us, we were growing high double digits as far as rural was concerned. So it will come back. I think it's starting to look much better, and we are hoping that things will get better with, the rural economy continuing to do better than expected. So we expect to maintain margins rather than, increase margins, balance inflation, and make sure that we are able to keep a stable margin profile. The rural growths are reasonable, I would say slightly high single-digit kind of growth.
So that's what you've heard Varun Berry talking about, the rural recovery which has picked up. But then clearly it was not just the margin compression, but we also saw that the volume did not pick up in a range what Street was penciling in. Anyways, let's move on. After a muted set of numbers, what Asian Paint has registered, Aamar Singh, who's the MD and CEO for Asian Paints, he is sounding cautious about demand conditions for Q3 also. However, he added that margins will remain within the band of 18 to 20% going forward. Let's listen in.
Overall demand, whether it is the consumer sector, whether it is the construction segment, or whether it is the paint industry, has been muted. And as a larger share leader in the market, to that extent, the leader gets affected a little bit more. And that is something which we have seen as a sentiment continuing, despite the fact that, in October first fortnight, we saw some good retailing, which is happening. We also have ongoing strong wedding season, which is coming in November and December overall to that extent. But we have not seen, the demand really pick up to that extent. There is some softening in terms of the raw material prices, which we are able to see. So we are expecting a deflation of about a 1.5% also happening in the coming quarter. Given all this, and if we are able to get to a reasonable growth in Q3 and Q4, we expect we should be kind of in the range in terms of overall guidance which we have given for the PBDIT margins.
All right, and that was the word coming in from the management at Asian Paints. Let's also get you the list of stocks that were buzzing away in trade today. In fact, Gaurav is joining in with just that list.
Well, yes, a lot of stocks which are buzzing on the back of the numbers. So first, let's talk about Hyundai Motors. We saw revenue declining almost by 7.5%, while profitability declined almost by 15%. As a result, we saw some pressure in this counter. Next, let's talk about Jyoti Labs, because we saw some flat growth here. Revenue was flat, and at the same time, net profit also grew only by 1%. And as a result, some pressure was there as well. Next, let's talk about Natco Pharma, because when we look at revenue, that increased almost by 32%, while profitability increased almost by 85%. And after that, we saw some uptick coming up in this counter. Next, let's talk about Uno Minda, because when we talk about revenue, we saw 17% growth, while profitability also increased almost by 9%. We saw some expansion in EBITDA margins as well. Apart from that, Triveni Turbines was in focus, because we saw a great set of numbers there as well. Revenue increased almost by 30%, while net profit increased almost by 41%. And lastly, we also have LIC, where JP Morgan upgraded the rating to overweight versus what it was at underweight, and also hiked the target price to 1,075 rupees, because they believe that strong VNB growth is likely to sustain, and as a result we saw some uptick in this counter as well. So definitely watching out on all these companies on the back of the numbers, as well as brokerage note that we have received today.
All right, the couple of stocks that were buzzing in trade today. Thanks very much, Gaurav, for highlighting all those numbers, all those stocks. Well, that's a wrap on this edition of Your Trade. Thanks so much for watching. Let's hope we have a brighter day tomorrow. It is going to be a Fin Nifty expiry also, Bank Nifty expiry also. Let's see how banks trade in tomorrow. Thanks very much.